The day of reckoning is here for altcoins. The market is not what it used to be, where you could buy anything, wait a few years, and make money. In this video, I'm going to break down why I think that is and which strategies for investing in crypto are still working today. But before I get into it, I want to remind you that nothing I say is financial advice. This is my personal opinion and analysis that can hopefully be a part of your own research. Now let's get into it. To start, I'm going to break down what I mean when I say the day of reckoning is here and how the altcoin market historically works. Because I know day of reckoning, it sounds apocalyptic, and perhaps for some of you it is if you're holding the wrong things. But we're gonna help to rectify that soon. So what I mean basically is that you can no longer buy any altcoin and expect it to perform. For a long time, I don't want to say forever because the crypto industry is relatively new, but say for at least 2 different cycles, you could have bought basically anything before 2017. You could have bought anything before 2021, and 99% of the time it would have done pretty well, even if the team was no longer active in most cases. Even if the project had not done anything new, as long as it was still a tradable token, it would have gone up. And the reason why is that there was a very limited number of altcoins. You had all this money that was entering the space because people understood that there's some value to having digital bearer assets. They understood that there's some value to having programmable finance. They understood the various other benefits of crypto. But there was a very limited number of assets to actually put it into. Say, even if there were like 2,000 to 3,000 different assets across major exchanges. In most cases, there were like fewer across the big exchanges, say a couple hundred even. Then you had all that money chasing returns from the industry, and very, it was like funneled into a few different places. And then on top of that, you would have the Bitcoin does well after the halving, as well as when the money supply expands. So you had this huge wealth effect from Bitcoin, which then would carry over to altcoins, and again getting funneled into a very small number of altcoins. And so times were pretty good if you were investing in crypto, and I'm going to show you guys what that looked like. So here is a chart of Bitcoin as well as altcoins from 2021. This starts right around the beginning of 2021. Orange is Bitcoin, blue is total crypto market cap excluding Bitcoin and Ethereum. Others is everything outside the top 10. And then this is percent growth. And you can see that Bitcoin over the course from the start of 2021 until roughly November, the exact date isn't really important, did about like 86%, maybe was up 100% at the peak. And if you go back further, you go back to like 20, you go back to say, early 2020, Bitcoin's performance would have been much better. But then you can see that altcoins went up even more, right? And often peak after Bitcoin. So Bitcoin goes up, altcoins keep going up as money flows down to riskier and riskier assets. And not everything did the same, not everything did well, but overall, this others category, so that's crypto outside the top 10 in this time frame I have here, was up about 700%. And let's see if we go out a bit further, we go out to like, Q1, Q2 of 2022, it was still up 600%, even after dipping. Even if we go out all the way to major crashes in 22, then we can see that, this is like post-Terra, post-3AC. We can see that altcoins were still up a lot. They were still up 200% at this point overall from where they had started. I think even if we went out to FTX, we would see that they were still up. So basically, altcoins performed extremely well in aggregate as an asset class. This year, that has not been the case. So let's go back to the start of 2024. So it's actually almost 2 years now. Total others is up about 4% compared to Bitcoin, has doubled. Let's do year to date. Others are down at 36%. Bitcoin is also down a bit. Only down about 5% though. So basically, if you just look at the numbers, something has shifted. And maybe some of you are thinking, well, that's because because others is still waiting to perform, and maybe you are right and I'm wrong, and maybe this video is a bottom signal. But I'm going to make the case that I don't think I'm wrong. I think that what's happened is that in the past there was this excess demand for buying altcoins because people wanted exposure to the asset class. And I think that demand that was in excess of fundamentals has been significantly reduced at this point. And I'm going to talk about the reasons why. I think there's three main reasons that have been kind of cataclysmic for the altcoin market. And I'm going to go through each of these in turn. But the result is that you no longer have this huge demand that's just like pushing all altcoins up together. Instead, what you have is that you have certain coins that do have good fundamentals are performing extremely well, and then others that don't have fundamentals are performing poorly. Basically, the market is maturing. All right, so let's talk about why I think that, or what I think has changed. So let's talk about what I think has changed. All right, so number one, if we look at this, Pump Fun, probably the most viral crypto app of this cycle if you look at it by like actual usage among people who were not crypto native previously, launchpad for launching meme coins. And there's other launchpads as well, but Pump Fun would be the most popular. So what has happened with Pump Fun? Well, if you look, say, the start of this year, and you could go back further and it would be similar, there were many days where 50, 60, 70,000 tokens are launching, and then graduated tokens are those that reach a certain market cap. And even those, you might have like 500 to 1,000 on many of these days. On bad days, you may have had a few hundred. But compare that to what I was talking about earlier, where in the past, you may have had like a few hundred cryptos total that were really buyable. I mean, there were more, but like ones that you could easily access on an exchange. Now you've got thousands, tens of thousands of tokens for people to choose from. And the result is that you no longer have that like funnel of liquidity being pushed into a few assets, often assets with like very shallow order books that then get forced upwards, creates this cycle where you have people hearing about like incredible gains in crypto, draws more people into the space, and then everything rockets upwards together like it has in previous cycles. It also, in my opinion, disrupts some of the wealth effect from Bitcoin going up, because now you no longer have like Bitcoin naturally going down to the next risk stage. Instead, it gets dispersed across all of these tokens. In many cases, it gets instead of going to like other market participants, it goes to founders that we'll put founders in quotes, to people deploying meme coins who have figured out how to kind of game the system and extract money from that. And then it disappears, right? And you never have that positive feedback loop started. And perhaps that's healthier, but I think that is one of the reasons why. The second reason why is that unlike previous cycles, we now actually have certain crypto-related assets with good fundamentals, both stocks and tokens. So for example, you have Hyperliquid, a perp-dex, and many months Hyperliquid is generating over $100 million in revenue that's going towards token buybacks. So you have some assets that are generating $100 million in revenue to go towards token buybacks. Then you have other assets that are generating no revenue, that have no value accrual system for their token, that oftentimes don't even have more than a handful of users. And so then is it a surprise in that situation that some tokens perform significantly better than others, and that in fact those tokens that perhaps have failed to get users at this point don't perform well at all? They may even be down. And that isn't to say that there's necessarily something morally wrong those teams have done, right? You know, founders launch products all the time that don't perform, but it's not shocking that the tokens don't do well if the product itself is failing to gain traction. And I think that's a big part of it. And then on top of that, you have companies like Circle IPOing. So then if an investor really wants exposure to the crypto market, they may ask themselves, like, why am I going to go into this thing that's much riskier? And I'm not even talking about meme coins here, right? I'm talking about tokens that are ranked like 50 to 300, right? They may say, why am I going to something that's much riskier when I can invest in a real company whose financials I can see, who's making money, like Circle, or invest in a token that actually is linked to a protocol that's earning revenue, like Hyperliquid. So I think that's the second thing that's happened. And then the third thing that's happened, so we have Bitcoin and all these other things here. let's add in the NASDAQ, okay? So we've got the NASDAQ now, and we're going to look at this year to date. And what do you see here? Now, unfortunately, it made these the same color, but what you can see is the NASDAQ has actually outperformed Bitcoin and altcoins. Let's go back further. So I think if we go back to the start of 2024, you would see that they had outperformed to some degree, which as they ought to, because they're riskier. But you go back like a year and a half, then there's many time frames where NASDAQ performed similarly, or if you go back to the start of this year, even better than Bitcoin and altcoins. And if you look at specific stocks, you look at specific sectors, then they've oftentimes vastly outperformed crypto, AI, NVIDIA and other chip companies, biotech, robotics. There's battery companies. There's all sorts of tech related stocks that have actually performed much better than crypto. And naturally, you're going to have some years where different sectors perform better. But if crypto is no longer this thing that's like uniquely good for big gains, then the assets are going to be assessed much more based on their fundamentals, based on their mid to long-term prospects, and based on their realistic ability to perform and their longevity, not just, is this a good narrative? Can I ride a wave that many other people are jumping on? And I think that those things together resulted in kind of like a day of reckoning for altcoins, like I talked about. By the way, this everything I'm talking about in this video, I wrote up in more detail in a post on my Substack, which I'll link down below, or you can find it at newsletter.dynamodefi.com. Given that it's no longer realistic to expect every altcoin to perform, does that mean that you should give up on the asset class? I'm going to say no, because there still have been many that performed well, and I think that in this new reality, it's actually possible to make investments that you have a much stronger conviction in, because you're investing based on fundamentals. So there's three main criteria that I'm going to list out that for me are a necessity nowadays for a token to be investable. And then after this, you still need to do due diligence, such as looking at the team, looking at the roadmap, and making sure that they're building a product that you believe in. All right, so here are the three, and I titled this section of this the Substack post. Again, this is where this video is from. Investment frameworks for the value-based crypto world. First is claims to protocol income, or a clear, transparent path to claims on protocol income. What that means is that the token is either receiving a dividend, it's the subject of buybacks, it gives you the right to allocate the protocol treasury, which is naturally built by income, or there's a switch to turn those things on that governance token holders can vote for. And in fact, I think if it's an early stage project, I actually like the switch being at 0, but I like the option to turn it on being there. Because if the option to turn it on is there, then that means that in the future, when the time is right, you could expect value accrual to start for the token. It's not just a token, but oftentimes it's better for early stage teams to reinvest the money rather than distribute it as dividends or buybacks. And I know that's controversial. I'm probably going to get people angry about this. Actually, I'm gonna go on this point a little bit longer, because every time I say this, people are like, well, crypto teams are smaller. They don't need a large team. It doesn't make sense for them to hire. And to that I say, like, what the hell are you talking about? Every business in the world that has potential to grow has something that they could invest in. Maybe it's not new people, right? Maybe they don't need to hire. Maybe it has to do with acquiring some sort of startup that allows them to expand vertically or horizontally. Maybe it's something else that would allow them to build a new product. But like, if you believe in the team, you can't possibly tell me that this early stage company has done everything they can to expand, in that having more resources would do them no good. It just, like, the logic doesn't follow there. So rant over, but basically it needs to have some path to value accrual in the future, but not necessarily today. And by the way, this isn't listed on here, but If the team has equity and token, bad news, right? We've seen multiple cases where crypto companies were acquired, equity holders got paid out, token holders basically were screwed over. Somehow crypto invented a new stage of ownership that falls below both equity and debt holders, right? Usually it goes debt, then it goes equity, gets paid out. Crypto invented tokens that fall even below that. So you don't want there to be equity. Basically, you want the token to be pseudo equity. Second criteria, consistent and growing revenue and earnings. Here's an example of what this looks like. This is not investment advice. I actually hold no position in this, but you can see this chart from Curve Finance revenue. That's the kind of thing you want, right? Over a multi-year period, you have revenue growing. And before this, Curve revenue was actually higher, but for close to 3 years now, it has been growing, which is a good sign. Number 3, market caps at reasonable multiples to past revenues. By this, I mean revenue could be good, it could be growing, it could pass on to token holders. If it's trading at a P ratio of 500 or 1000x, it's going to be tougher to justify an investment. Now, there are tech companies that trade at very high PE ratios, maybe not usually that high, but at very high PE ratios. So you can justify something a little bit elevated, but I would say that that's an increasingly important ratio to look at, and you want to look at this over revenue over a longer time frame, because oftentimes crypto revenue can jump up one month and jump down the next month, and if you extrapolate just 1 month of strong performance out to multiple years or even 1 year, bad things are going to happen to you. That's all for today. If you want more fundamentals-based crypto analysis like this, be sure to like this video and subscribe so YouTube shows you more. And until next time, this is Dynamo DeFi.